Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to Apply. All right, so today I have Troy Zander on the line, and he's a partner over at Manat, and he's also one of the premier sponsors over at the Venture Debt Conference that we'll be getting into a little bit today, Venture Debt Conference 2025. First off, Troy, welcome to the show.
Thanks, Adam. Great to be here. Thanks for having me.
All right, so we got a lot to talk about, man. We're going to get into the state of the venture debt market. Of course, I want to get into Manat, what you're doing there. Also, your involvement with the Venture Debt Conference in general and what you're doing with the Deal Flow events, guys. But before we do all that, let's start with what we like to call our Mission Matters Minute. So, Troy, at Mission Matters, our aim and our goal is to amplify stories for entrepreneurs, executives, and experts. That's what we do. Troy, what mission matters to you?
Yeah, great. Thanks, Adam. So at Manat, we're a multidisciplinary firm of lawyers and consultants and representing clients in banking and entertainment, government, in industries like healthcare and financial services, media, technology, and beyond. And our goal is to be the best service provider to our clients that we can be, and really to be their trusted advisor. My personal mission is to represent lenders and the companies that they're lending to in the venture lending space. We'll talk more about that. And really to be that same trusted advisor to those lenders, and when we're representing companies, to those companies as borrowers.
It's awesome. I like bringing mission-based individuals on the line to share why they do what they do, how they're doing it, and really what we can all learn from that together. So we all grow. So before we get into Manat, though, and I guess and also kind of the conference in general, where'd all this begin for you? Like how'd you get started? Were you growing up and you're like, man, I'm getting into venture. This is it. Was that what you were talking about in elementary school? Give me the dirt, man.
Nope. Like every other little kid, I wanted to be a fireman or a professional baseball player. And the truth of the matter is, I describe myself as an accidental lawyer. I went to undergraduate at UC San Diego and studied sociology, and realized that I probably needed to set my sights somewhat differently. I decided to go to law school because it was 3 years, and I knew I could probably handle 3 years, and got out and got a job as a Chapter 11 restructuring lawyer, as a bankruptcy lawyer. And I loved it. It was fast paced. It was interesting. It was exciting. It was scary. And most importantly, it was fast paced in both a transactional practice and a litigation practice. I like to say that we would work on the deal in the morning and we'd go fight about it in the afternoon in the courthouse. And after a time, after I made partner at my first firm as a Chapter 11 restructuring lawyer, I got recruited internally into what we call the venture lending practice. And that was 25 plus years ago. And I've been doing it ever since. And I bring the experience and the expertise as a restructuring lawyer into the engagement with lenders on loan origination work. And so the former influences the latter on a daily basis. And as we have, blips in the economy, blips we'll call them, oftentimes that restructuring expertise comes even more in handy as we work with lenders. So that's how I got to what I do now.
Man, I'll tell you, I think you're the first person that's referred to themselves that I can remember. I've done over 6,000 interviews that referred to themselves as an accidental lawyer. And I'll tell you why I love this brand, this title, because my last book, I referred to myself as an accidental entrepreneur. I'm like, I never knew. You think I thought I wanted to be a podcaster or do this or that? You're crazy. I didn't even know that was a thing. Was it a thing? I don't even know.
Right. We'll have to team up, the accidental entrepreneur and the accidental lawyer. I'm sure.
Hold on. So the Accidentals, is that a duo we're taking?
It sounds like a band. Actually.
It does sound like a band, the Accidentals. We started by accident. Stop. Oh, man. I'm in. First off, what attracted you to stay in that space? So you mentioned your recruiter, even before Manat, like what was, law? There's a lot of different things you can do when you hit that. Was it a buildup? Was it like instant? Like, how did you know that was going to be your thing or your niche?
I got a job at a firm. They had 2 spots left in terms of practice area.
Yeah.
True story. One was litigation, one was restructuring. And they said to me at the interview stage, what do you want to do? As an accidental lawyer, I essentially flipped a coin. Bankruptcy. That's how I decided.
Wow.
And I'll tell you what, I got very lucky. I had mentors, and I mentor other people. I was taught and trained how to be a Chapter 11 restructuring lawyer. I didn't know it, but it just suited my
Yeah.
My personality, that fast pace, that intellectual curiosity and
Mhm.
stimulation. And as I say, then I got recruited internally at the firm where I was at the time into the venture lending practice, and that
Mm.
too was a great fit for me.
Yeah.
I've been very fortunate to work with people who I get to consider friends. I'm
Mm.
a service provider. I know that first and
Mhm.
foremost. There are a number of us, but I've been fortunate to spend time working with people and developing friendships, professional and personal, that have them continuing to call me and my team. And so I've been fortunate
Mm.
enough to build a team over time and to continue to work with those lenders. And as I say, both in terms of the loan origination, the making of the loan in the
Mhm.
first instance, and then the workout, the work through, the amend and pretend, forbid the restructuring, the bankruptcy, all that kind of stuff, but really sort of, the entire life cycle of a lending relationship transaction.
Mm. That's interesting. So essentially, pretty much correct me if I'm wrong, your whole career, it was kind of leading that way and you're still there. Yeah. Like, I
Seems
mean,
to
in terms of
be.
the niche, that's amazing.
Yeah. I consider myself fortunate. I've had a great
Yeah.
run. I've worked with a lot of great people. I've worked
You've
with a
seen a
lot
lot
of
of
great
cycles. You've
lenders,
seen a lot of cycles too.
seen
So
a few
you've been
cycles.
able.
We'll talk about that at the Venture Debt Conference for sure.
Yeah. Speaking of that, that's a great transition. Thank you, man.
I'm
Venture
an
Debt
accidental
Conference.
podcaster. What can I tell
We're
you?
getting into that too. That's the thing. So what's your? I believe. Correct me if I'm wrong. You're going to be hosting some panels. You have a colleague as well that's going to be doing. Like, give me a little bit of a feel for the content.
Yeah, for sure. So exactly right. I'll be moderating a panel that's entitled 2 Years On, What's Really Going On at the Venture Banks. It's going to focus on what I'm calling sort of debunking the myth and mythology of what's going on at the venture banks. Are they making
Mm,
loans? Are they not making loans? What's really happening on that sort of, and I don't like the word, but that ecosystem more
mm,
broadly. My colleague Haley Fiala will be moderating a separate panel that's really focused on the global growth economy, really
mm,
focusing on venture lending in the UK, EU, and beyond, with participation from folks in the lending space in those geographies, and
mm,
including Israel, including the UK, Germany, et cetera. So we're
mm.
really looking forward to it. It's a great audience, and it's a great opportunity to network with our friends and our colleagues and our clients and meet some new people, et cetera.
Now, Troy, you said debunking myths, man. You know, I'm going to need at least one myth to be debunked. Like I'll have to now. And I know for everybody watching, okay, this might be. There's no spoilers. Come on, the
Right,
panel hasn't
right.
happened yet. What's a myth that you hope gets debunked?
So look, one of the myths is nothing has changed, or the
Mm,
converse, everything has changed, and since when, right? So there's some
yeah,
context to this. You may recall in 2023, SVB, Silicon Valley Bank,
hmm,
was taken over by the Fed and ultimately sold, and is now part of First Citizens. And there were some
yeah,
other banks, and there was a banking crisis that went on. And in the venture banking space, which is a unique space, so
hmm,
this isn't translatable sort of across the landscape, but it is a microcosm.
hmm,
The venture banks sort of split up, or at least a lot of the people who were part of Silicon Valley Bank, part of some of these other banks, Signature, et cetera, First Republic, went
hmm,
elsewhere and brought their
hmm,
business elsewhere. And in 2023, when we had our first venture debt conference, about 2 weeks after that,
yeah,
late in March, that happened March 10th, the thought was that the big winners of that banking crisis, and we didn't know how far or wide it was going to
hmm,
be, were going to be the private credit providers, the non-bank lenders into the venture lending space.
mm,
And that's a myth that we got wrong, that the venture lenders, the private credit providers, were going to be the big winners. I think they would tell you, friends of mine, others in the
hmm,
space, like it didn't really work out the way that we thought it would. I think there was another myth that, gosh, the companies are not going to have places either to park their deposits or to provide them lending facilities. And while it's
yeah,
taken some time, the landscape has really, really changed. I think we're back to this era. I was just talking to actually one of the guys on my panel, Mike Letterman at Bridge Bank, and we were talking just Monday about the fact that he's now seeing potential borrowers of his looking at 5 and 7 term sheets from venture banks with
mm,
whom he's competing. And so this myth that, like, oh my gosh, the entrepreneurs are not going to be able to get funded, I think is entirely wrong. That's one of the myths. And you know, again, this notion that the companies are going to be the big losers, I think, is entirely wrong. It's
mm,
entirely reset, and frankly, good for good for all of us, good for the economy, good for the innovation economy for
Hmm.
sure. Of course,
Yeah.
now we need a public market to start going and participating and engaging,
Mm.
because we find that the private market always follows the public market. So
Mm.
hopefully that engine will get going as the year continues. There'll be more public company investment going on and
Yeah.
greater engagement at the venture capital stage, and thus greater engagement with venture banks and venture lending.
Mm. You mentioned the public market, or I should say the absence of a public market. I want to leave that on the table. Let's go a little bit deeper. I don't want to assume
Sure.
everybody understands that. Like, what is that implication? Like, go further, please.
Well, you don't have to read the Wall Street Journal every day to see that the companies are not really going out getting public, that
Yeah.
the public market, that is the stock market in its simplest form,
Mhm.
is volatile, to say the least, is not terribly inviting for new investment. And certainly companies are having trouble going out and engaging in initial public offerings, IPOs.
Mhm.
That's challenging for all of us, even the sort of the little person
Yeah.
who is investing in their 401k, which is oftentimes investing in the public market, because if there isn't a robust public market, their 401k stays at a steady state as opposed
Yeah.
to increases in value over time. And that again is a microcosm of the greater economy. When we don't have a robust public market, the economy generally, not always, but
Mhm.
suffers, doesn't do as
Mm.
well.
Yeah.
And it's the same in the venture debt market, right? The venture debt market is in part dependent on a robust public market. In the absence of a robust public market, it's tough, not impossible, but tough to get venture lending deals done. I
Mhm.
will say, though, that there is another myth there to be debunked, and that is, well, gosh, Troy, then without a public market, then venture banking, venture lending must be dead. Far
Mm.
from it, right?
Yeah.
This example of a company with 5 and 7 term sheets, and that's not unique. We're seeing that a lot. We're hearing a lot from our venture lending clients that the competition for these deals is
Mm.
stiff. Lots and lots of competition. It's now a buyer's market again. Great news
Mm.
for that innovation economy. We'll see whether the public market sort of engages sooner than later.
Yeah.
Let's hope.
Are there any other trends in general, or just in general, that you're following in the venture debt market? Like, what are some of the things that you're seeing from your vantage point, considering your not only your tenure but your vantage point?
Well, the trends that we're looking at, we the lenders in the space, and in part counseled by the lawyers
Mhm.
counseling those lenders in the space, generally get lessons learned. They don't really want them, but lessons learned in the downturn of an economy.
Yeah.
2023, for example, with the bank failures, and before
Mhm.
that in 98, 99, and 2008. And for better or for worse, those lessons are often short lived.
Mhm.
That is, for example, well, in the venture lending space, well, we should take intellectual property, for example, as collateral. The standard in the market, generally speaking, certainly
Yeah.
at the venture bank level, is what they call negative pledge deals, meaning the intellectual property of the company is not pledged as collateral, and the
Mhm.
borrower agrees that it won't agree not to do that with someone else. I won't get into too much of that detail. When there's a downturn, the lenders start thinking, shoot, that's really a bad idea. We should be sure we have our arms around all of the assets, including the
Yeah.
equity. And so for a short period of time, after each one of those economic downturns, all of a sudden the market is that intellectual property is being included as collateral. Well, over time, the economy improves, and or the competition for lending improves, gets
Mm.
better. And so all of a sudden, then we go back to this phase, this stage, well, we're going to not take intellectual property as collateral. And I
Mhm.
would tell you that we're there again, that in 2023, when we had the bank failures and we had the mythology of the venture lenders, the non-bank
Mhm.
lenders, the private credit providers really filling the gap, that now being debunked, that hasn't
Mhm.
really happened. There was some period of time where deals were getting done where intellectual property was included as collateral. Now we're
Mhm.
back to that same negative pledge thing. So in some respects, and another on my panel, Ken Fugate at Customers Bank, was saying as part of our preparation, the more things change, the more they stay the same. He's exactly right.
Well, Troy, this man, I don't know that I'm going in person yet, but I wish I was because this panel, man, this is gonna be good to be a fly on the wall here. That being said, I mean, it's been great having you on the show. I learned a lot. I'm sure my audience did as well. I have to ask, what's next? What's next for you? What's next for Manat?
But thanks for asking. Look, what's next? Immediately next is the Venture Debt Conference. Really looking forward to being the premier sponsor at the Venture Debt Conference in New York, April 10th. I've got a great panel. I've mentioned a couple of them, Mike Letterman and Ken Bugate, and Sean Stone at SVB, and Sean Linden at Bank of California. My colleague has another great panel. Come out and join us. It's a great time. It's a great place to learn about what's going on in the venture debt space, and a great audience and excellent networking opportunities.
Yeah. And Troy, if somebody is watching or listening to this, and if they want to follow up and learn more about Manat, how do they do that?
Yeah. So go to manat.com, MANATT.com. You'll find our website there. Look me up on LinkedIn. I'm actively engaged at LinkedIn, Troy Zander, or otherwise you can email me at tzander, first initial, last name, at manat.com.
Fantastic. And for everybody watching, just so you know, we'll definitely put the links in the show notes so you can just click on it and head right on over. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way on your journey as well. So again, hit that subscribe or follow button. And Troy, man, appreciate you coming on the show. Thanks so much.
Thanks for having me, Adam. Great to see you.